All right, glad to have you back. Now, analysts say they expect Nigeria's GDP to grow to 4.22% in Q4 of 2025, an increase from 3.98% in Q3. Now, this signals a positive outlook for the year as economic growth is projected to accelerate towards year end. Well, this was disclosed in a report of a macroeconomic research released earlier in the week, which followed the latest GDP data from the National Bureau of Statistics. The report further states that Nigeria's economy grew by 3.98% in the third quarter of 2025, marking a slight improvement over the 3.86% recorded in the same period of 2024, but a decline compared to 4.23% in Q2 of 2025. Reacting to this economic data, analyst says the dip in Q3 2025 GDP had been anticipated, given softer oil output, a consequence of fading supportive base effects. However, a rebound is anticipated in the last quarter of the year, which is expected to be driven by improving macroeconomic conditions. I have two guests. My first guest is Dr. Chijioke Ikechukwu, who is a renowned economist and vice president of the Abuja Chamber of Commerce. I also have Mr. Paul Alaje, who's also joining me, is a partner, senior economist with SPM Professionals. Good afternoon, gentlemen, and thank you for being on the show this afternoon.
Good afternoon, Tolu.
Good afternoon, and thank you for having us.
All right, thank you so much. Let me start with you, Mr. Alaje. I'd like to get your views very quickly around these figures that we got for GDP Q3. It's been a topical one. Analysts like you have been reacting to this, and I'd like to get your views around it generally before we go to some sectoral performance that we see in these figures released by the NBS.
Well, the GDP numbers has been released by the NBS, and according to the NBS, all parameters have been taken account of before they released the numbers. Nigeria still grew above 3%, which of course means there is positive growth. And I think that when you look at the major sector, service sector took the lead, followed by agro. The only concern around the GDP growth is less than 2% GDP growth rate of the composition of manufacturing. Generally speaking, I think based on the rebased GDP, the numbers reflect all other parameters that NBS is looking at. More so that we have also rebased inflation to manage from real GDP, from nominal GDP to the real GDP.
Now, Dr. Ikechukwu, I would also like to get your views around this GDP figures that we have for Q3 of 2025. Many analysts like you expect that we will get something better by the time the figures for Q4 are released by the NBS. But looking at what we have on the ground, how would you react to this, and how does it affect the larger economy?
Yeah, it was obvious the reason why there was a little drop, a marginal drop from Q2 to Q3. To the extent that we are having Q3 at 3.98% growth. But I would have been expecting that in Q4, we are going to have a higher growth, maybe up to 4.2 as the case may be. But that which has actually been eroded with the recent decision by government to only release 30% of the capital expenditure for this 2025, and 70% to be taken and spent next year. Because these are things that would have actually generated such multiple growth within the economy. But of course, with the season of Christmas coming very close, we expect that that is also going to generate some level of growth. But I wish we had the two of them generating growth for the economy. We would have actually attained a growth rate of about 4.2 or 4.3%. But having said this, we expect that whatever shortfall we're going to have from that shifted capital expenditure to 2026, we will gain in the season of Christmas, because within this period, a lot of purchases, a lot of things are done. So we expect to have that kind of growth because of that.
All right, let's take a commercial break, and when we come back, the conversation continues. Back, you're still watching Business Nigeria, and I have Dr. Chijioke Ikechukwu, a renowned economist, Vice President, Abuja Chamber of Commerce, and also Mr. Paul Alaje, who is a partner senior economist with SPM Professionals. Mr. Alaje, my next question goes to you. Considering the economic indicators, we've talked about 16.05% inflation as at the last figures released by the NBS, also from the agency. Now, many are concerned about what next, considering the fact that there's still no shift with regards to monetary policy rates. That's on one side. What do you also project generally, considering the spending that is expected in this month of December? Do you think that there could be a shift with regards to inflation? And generally, what will be your outlook for the year 2025 as we move to 2026?
Okay, we are currently in the year of outlier for inflation. Most of the inflation numbers will not align with what is obtainable in reality. The reason is because we are currently dealing with an outlier numbers. Outlier does not mean a lying number. In economics, and especially in econometrics, when we use the word outlier, we are talking about a shock, which may not necessarily be a bad thing or a good thing. What I'm saying here is that we have changed the base year. So the number will not be as predicted in previous year. Therefore, the trend we have seen with inflation, it's a downward slope. And we have tried to disaggregate what has influenced this downward slope in inflation, knowing fully well that truly some food item came down, but prices of rent, of transport, and so many other key parameters that form inflation, especially core inflation, are still generally high, and some of them are still increasing. But because we have changed the base year, in economics, we call it the base year effect. So you might not say that the Bureau of Statistics is lying, because a number of persons have confronted me at events to say that the Bureau of Statistics is lying to us, and you of all persons should tell us they are lying. I said, listen, if Bureau of Statistics have chosen the new year, a different year as their base year, the number they are releasing are correct. But it will not align because you are just experiencing it for the first time. It's in the subsequent years, which is from 2026, 2027, you'll now be seeing what the new number will look like. However, taking decisions simply based on these adjusted year in this year that we are comparing will not be right professionally as an economy. So we have to be very modest. In fact, the GDP growth, like I said, because we are using this new number to now divide the GDP, it's even reflecting on GDP, showing it as relatively high and positive. So for now, this year 2025, it's the year of outlier. So we are not saying the numbers are wrong because they put, I'm looking for another English word so that it will not look as though one is criticizing, but one is objective in the real sense of it. So now what is the, so that's for 16.05%. We might still see a further withdraw, a lower number. Somebody there asked, the question will be, does it mean that the president have seen the number? I said no. If we're referring to what the president spoke to in December or January about what inflation will be at 15%, he was certainly talking about the old base year. So that will not have given us 15%, clearly. But we are talking of this newly based number. That means that we are now working to the answer. So it's better for administration as a people, as economists, not to get ourselves to that bottleneck of trying to tie down to what the president said or what he has not said. I don't think we should get into all those things. We are economists, we are not politicians. We should not get into those conversations. For GDP number, I've studied this very carefully, and I can tell you that, yes, 3.98%, approximately 4%, is relatively lower, marginally lower than 4.23 that we saw in the last quarter, but higher than what we had last year, this time last year, which is at 3.86%. What that means is we should need to look at the number critically. For me, the most interesting thing to me is that manufacturing only grew. Manufacturing, which you know that in all my conversation, most of my study is around manufacturing. 1.25% is what it contributed to entire growth. It grew, the real growth. And when you look at manufacturing year on year, it's only 1.25%. I think that is abysmally small. I think policy should be around it. What Bureau of Statistics is telling authorities that you need to pay attention to the manufacturing sector. This sector cannot be growing in less than 5%. We are having, ideally, because somebody will quote me and put me on Twitter, I said manufacturing should grow by 5%. Ideally, manufacturing should not do less than 20%. But for the kind of situation we have now, we should be looking at a minimum of 5%. I've seen service sector, contribute about 7.15% to the GDP, but this 4.15% account for 53% of the entire GDP. So there is that misalignment, I beg your pardon, in our GDP number and what is contributing to growth. Oil sector that now contributes the lowest, in terms of our GDP, now gave us the highest foreign revenue. So we need to look at it critically. Bureau of Statistics have continued to submit as to present this number to us. Now, the challenge is that of all these numbers that is presented to us as a people, what are we doing with the numbers? Which policy, which agency, which ministry, which parastatal is taking this number up and pushing them, crunching them to now see what policy we need to make them work? For me, it's not about what projection I have, because for 2025 is an outlier here. But I must say something to what Dr. Chijioke mentioned regarding we dropped 70% from the capital project. Capital is investment. What we are saying is that we have removed 70% of investment from 2025 budget, and we're now pushing it to 2026. So now, I saw the circular and I've read it. What it means is that we have 100% of consumption, which is recurrent, which is for debt service, and so on and so forth. But I don't want to go into that argument, because if I go into it, it may take the whole lot of time. We haven't done thorough examination of that decision. And so here is the point. 30% investment is what we have. Now, does it mean that we will technically be having component of 2025 budget wrong with 2026 budget? Can we therefore say that inflation will still be what it is? Well, 2026 is pre-election year. You have been around for so long, Mr. Tolu, to know the implication of inflation in pre-election year. You might have highest inflation in pre-election year too. Spending may go up in pre-election year. I don't know if you have monitored what happened to exchange rate 2 days ago and yesterday, in the light of, and I'm happy Central Bank came with a policy, even though that may have a side effect, but I believe that with the body language and the decision, not even body language, Central Bank is making recently, which are really very correct, I believe that they will watch out for what may be the side effect of such policy. Thank you.
Interesting stuff there. Now, let me go to Dr. Ikechukwu now and ask him regards to how manufacturers are faring. 27% is the monetary policy rate, and everyone knows that manufacturers are crying, talking about getting monies from commercial banks at over 30%. That's one worry, and many were expecting that maybe that shift would have happened at the last meeting. Dr. Ikechukwu, you deal very, you meet so very well with all of these players in the private sector and the business community. Tell us, what are the feelers you're getting reacting to maintaining this rate at 27%? That's on one side. I also like you to share your thoughts with regards to what you think is the outlook, considering the present challenges that we face as a country.
Probably this is one of the most difficult years for manufacturers. It is so because, apart from the fact that interest rates have remained high throughout the entire year, in fact, coming from even last year, interest rates remained high. They are not even having access right now to credit facilities. The reason is because non-performing loans of banks, all banks, rose tremendously. And of course, all financial institutions rose tremendously just because of default rates that have existed. These default rates have stemmed from many facts. The fact that most of the contractors have not been paid. And of course, that portion that would have been paid now, like I mentioned, is then moved to next year. So what is going to happen is that many banks have stopped giving out facilities just because their non-performing loans are rising so much in percentage form. And because of that, they have just said no more. And you see, when the economy begins to be stifled this way, you see that a lot of things are going to happen. It's going to affect the economy. That's why I was just being very skeptical about what growth will look like towards the end of the year. So it's a very tough period for manufacturers. So it is also a little difficult because you know how difficult it is for anybody to even access loans from outside the country, considering a lot of factors. So we think we need to stimulate the economy, and to stimulate the economy, there has to be a flow. There has to be a reduction in the interest rate. There has to be that thing that will give banks the courage to start giving out money again, because right now there is a hold on many credit facilities just because of what I mentioned. But we wish the situation was different so that manufacturers will produce enough for the season, because they need to produce enough to meet the demand of the season. Otherwise, once we start having scarcity of items produced and supplied to the market, we're going to be having higher prices towards the end of the year, which obviously will reverse all the good results we have had in the macroeconomic issues. So it is good to consider, to be deliberate about things we want to achieve from one sector to another, in order for the economy not to be growing and dropping just like that. So these are all the considerations to be made.
Okay, then now let me ask Mr. Alaje this last question and let him go, because I know he has to attend to another meeting. Mr. Alaje, you touched on the foreign exchange market, which I also confirmed yesterday that there's been a shift. It's about 1,470, 480, they're about that. And to buy is even almost about 1,490. But the CBN licensed 82 new BDCs. Many will say that we need the BDCs to also help, argument and, one way or the other, they have the role they play in that market. How would you react to this? We're supposed to have the president of the Association of Broadly Shunned Operators, but he couldn't make it because of some very, very important issues that came up. But how would you react to this move by the Apex Bank? We know that the BDC operators have been going all around, to complain about this not being allocated Forex for some time now.
Yeah, so the BOFI Act 2020 empowers and the updated of the same guideline 2024 empowers the Central Bank of Nigeria to regulate what happens in that market. 82 is what have been approved, as you have rightly mentioned. Recall that as of 2024, 4,173 licenses were withdrawn by the Central Bank of Nigeria, which of course have tremendous implication on the market. There were a lot of complaints from the BDC, but one way or the other, thankfully, Dangote Refinery came mainstream. Nigeria did remittance, getting close to 20 billion, if not more, within the space of 2 years into Nigeria market. All of this help us to stabilize what we have in the foreign exchange market. Now, the impact is clear. Nigerians can now know which one is legal, which one is illegal when it comes to BDC. But what we need to watch out for very quickly is liquidity and capacity of these 82 BDC. Will they be able to manage the entire demand stretch? Because what is most volatile in our economy since I've been doing this study in the last 50 years is exchange rate. There are many things, including price of fuel, price of food, but one of the most sensitive is exchange rate. The lines must be guarded jealously so that nothing gives negative signal. Now, the timing is also important to me. Next year is pre-election. When I say next year, don't think about 12 months. Think about days, because in a matter of days, we're already in that next year. Now, that next year, what happens when politician wants to carry out their interest? And I've been saying this at different platforms, that the advocacy I have right now is how do we stop those who hold dollars in pre-election year for not doing that, so that we know. So with 82 can they manage the entire market? Then will it not lead to over-dependency on approved BDC by Central Bank? Could you also mean that Central Bank has just released the first batch? Maybe they have others. I understand that Central Bank has done something to increase the capacity of those who can manage, to increase the market cap for those who can operate the first tier and the second tier. But at the end of the day, what really matters is can these people manage the entire demand side? If yes, and will they also be, what will be the source of supply? We already have some 3 sure sources of supply. Debt is giving us supply to FX, remittances is giving us, then I can mention among other things that gives revenue is Dangote refinery. Others can be we can bracket them into one and say we have perhaps about 4 major sources. There are other sources, of course, but for these 4 major sources, can we say that BDCs, if you reduce them to 82, will they be sufficient? These are questions on my mind, and I hope the authority will provide answers to them in the coming period. Thank you, and so God bless you.
All right, then, Mr. Paul Alaje, let me thank you so much for your time on the program. Partners, senior economists, SPM professionals, do enjoy the rest of your day. All right, Dr. Ikechukwu, I also like you to react to that, because when we saw this news of 82 BDCs being listed, journalists were like, these guys are being brought back to the market, and you know, many thought that they're going to play their role as expected. But some would tell you that, well, the CBN could be able to manage this foreign exchange market. We've seen the disparity between the order market and, of course, the I&E window. There's been that closeness in recent times. But just 24, 48 hours, we've seen a bit of change. How would you also react to this, Doc?
With such number of new BDCs coming into the market, don't forget the fact that a lot of them were dropped, over 1,000 of them were dropped. And then, of course, just like Paul said, pressures increased. So this 82 that were registered. Now, what has happened in this registration is the fact that the existing ones, I want to assume, the existing ones created 2 or more BDC licenses in order for them to have one. You see one person having up to 3. Some of the people who are not even primarily in this business have used some certain powers in government to be able to get this. So I agree, and I want to also ask the same question: do they have the capacity? You see, when a BDC gets licensed and all their sources will just be when government gives them allocation, then there's a problem. Every BDC should be able to think about how to source their foreign currencies so that when the demand for their foreign currencies come, they'll be able to meet such demands. But the essence, I can tell you, of this like new licensing spree is the fact that they already assume that CBN is going to be allocating monies, and that is just where the issues are. We need to get to a point where people or such financial institutions, it's just like banks or other financial institutions thinking that CBN is going to give them allocations to be able to give out loans. It is exactly the same kind of thing. So we should have been certain about how they are going to get their sources, because that supply side is very important. For demand can always be up to 100% of what you have, because many times in the market we don't have enough to supply to supply to the demand. But we have to drive the the supply side of the bureau change in order for us not to get back to where we used to be before this over 1,000 were removed from the market. But otherwise, if they have this, and they will increase the number of sources of these monies, then we expect that the interest, the exchange rate is going to drop somewhere in the future. That's what we expect.
Dr. Ikechukwu, I want to take you also on around issues around insecurity and what it means for our business environment. You know, in recent times, all of this issues all around the country. Yes, we know that government is facing this head on, but many would tell you that it does have an impact on investors' confidence and all of that. What feelers are you getting, and what do you think needs to be done, particularly as it affects our farms and all of that? Because you know, prices of foodstuff at the time we started seeing a bit of decline, and everyone was commending government. But if we have issues with insecurity, farmers won't be able to get to the farms. Of course, there will be issues again with regards to price of foodstuff. Not even at this Yuletide season, and everyone wants rice and big chickens on their tables.
Yeah, so you know, the reduction in the prices of agricultural products that we experienced within this period was just a seasonal thing. Season The season being the fact that this was a rainy season. A lot of crops grew within this period because of the rainy season. And so this is usually a bumper harvest period, and there'll be excess of vegetables, excess of maize, excess of beans, rice, as the case may be. But that's just actually not that we have had an improvement in security situation in the country. It's been a major pain in the growth of our country, in the investment level of our country. It's been a major pain. The insecurity, of course, it didn't start today, but we are also, like you mentioned, we're also seeing the increase in aggression all over the place. This is affecting both local businesses and international businesses. It's affecting investments. It's been a major problem that we have to deal with. Any day we're able to solve that problem and solve the problem of power in the country, then just know that we are very close to our super bumper harvest in this country.
Tax laws also, I know you've been having conversations around that. We see the FRS and other agencies going around educating people around what they should expect as we move into 2026. And that's also something that I'd like to get your views on. You know what happened with the CGT when the minister had to go to the stock market to explain to stockbrokers that, no, we're going to revisit this and all of that. I'm worried. Do you think there's enough of awareness for Nigerians to understand what they should expect by 2026? Go on social media, you see different kinds of narratives everywhere.
So the reason that you and I and maybe a few other people have a little knowledge is just because we've been engaging the Presidential Committee on Fiscal Growth, fiscal reforms. Many Nigerians, in fact, let me just say about 95% of Nigerians don't have an idea of what to expect. So I want to believe that more and more advocacy, more and more information must go around, probably sector by sector. Because what applies to a manufacturer may not apply to an importer. What applies to an importer may not apply to an exporter. So maybe we'll have to put them in various clusters and address them and continue to give them that advocacy and show them how the thing will affect them, their business. But if we take the entire reform and think speaking to Nigerians will change anything, then it may be a problem because they are so huge to understand and so complicated to understand. So we need to take them sector by sector and let them know those ones that affect their particular sector. That way, they will be clear to them, telling them the benefits and telling them the implications of the new tax laws. Otherwise, it's a whole lot of, it's a gamut of major things that no single person can understand fully, except you are in that particular sector talking about them. So that's the way to go. They may make all the efforts going around talking to Nigerians, but I think we need to put the sectors into clusters and start addressing them according to their cluster, the needs of their clusters. That's the way to go.
Well, finally, before I let you go, Dr. Ikechukwu, we've seen a better handshake, of course, between the monetary and the fiscal side in recent times. We've talked about this, better than what it used to be. And, but the question really is, inclusive growth is what Nigerians want to see. It's what everyone wants to see. Yes, if we look at the indicators, the economy seems to be bouncing back. But in your own thoughts, let's talk about interventions again as we wrap this up. What sort of interventions will you be expecting before we go deep into the electioneering season from 2026, late 2026, where many expect that the focus will now be on elections and all of that? What do you think government should do? Do they have any quick wins for them?
Yes. Can you see me?
Yes.
Okay, great. I think, of course, they have to sustain what they are doing in terms of the handshake you talked about. We are seeing a good number of them, and we expect that they should do very well in that regard. But most of the things that are affecting the economy are still beyond both the fiscal and the other sectors. You know, you and I talked about insecurity right now. Insecurity is neither monetary nor fiscal. And so we need to also put everything in place, to ensure that all the things that are going to affect the economy must be in place and we must deliberate about them. Because of course, there is a whole lot of synergy between the fiscal and the monetary policy, but many other things are still outside of them that are going to affect the economy. Otherwise, they have to sustain the tempo and continue with what they're doing in terms of corporations and synergy.
Dr. Chijioke Ikechukwu is a renowned economist and vice president, Abuja Chamber of Commerce. Thank you so much. It's always nice to have you on the show, and compliments of the season to you.
Thank you very much, Tolu. Have a nice season too.
All right, then. Thank you so much. Before